Jim Rohn once said, "Don't just make a living, design a life." That design begins with ownership, not just of ideas, but of real, tangible assets. You see, most people work hard for money, but the wealthy, they let their assets do the hard work. Assets are not just things you buy. They're tools that generate income, appreciate in value, and secure your financial freedom. Today, we'll go through 10 real, proven financial assets that can help you grow rich, not overnight, but over time. These aren't abstract ideas. They're real, accessible, and they've created millions of success stories around the world. Let's begin. Buying stocks is like owning a piece of a business. When you own shares of a company like Apple, Microsoft, or Tesla, you're literally a part owner. If the company grows, so does your wealth. Historically, the stock market, especially indexes like the S&P 500, has delivered average annual returns of 10% to 11%. That means if you had invested $10,000 in 1990, it would be worth over $180,000 today without adding a single dollar. Stocks provide two key sources of wealth: capital appreciation and dividends. Capital appreciation comes from the rising value of the share itself, while dividends are cash payments companies distribute to shareholders from profits. For a beginner, index funds, or ETFs, are a great way to start. These funds spread your investment across hundreds of companies, reducing risk while still capturing growth. Investing in stocks isn't gambling. When done right, it's ownership in the engines of the global economy. Real estate is one of the oldest and most reliable paths to wealth. When you buy a property, you're investing in something tangible: land, homes, buildings, things people will always need. Property prices tend to rise over time, and many properties generate steady rental income. In markets like the US, UK, and parts of Europe, real estate has appreciated by 4% to 6% annually on average, not including rental income. What makes real estate powerful is leverage. You can control a $300,000 asset with a $60,000 down payment. The tenant pays the mortgage, and you gain equity and appreciation over time. Rental properties, Airbnb models, and multifamily homes can create consistent monthly income, while also growing in value. Add tax deductions, depreciation, and long-term stability, and it's easy to see why most millionaires own real estate. Bonds are a safer, more predictable way to grow your money. When you invest in a bond, you're essentially lending money to a government or a corporation. In return, they promise to pay you regular interest, called the coupon, and return your original amount after a set period. US Treasury bonds are among the safest investments in the world, with typical returns between 3% and 5% annually. Corporate bonds offer slightly higher returns, around 5% to 7%, depending on the company's risk profile. Bonds are excellent for diversification. When stock markets crash, bonds often hold or rise in value. They provide stability, preserve capital, and generate passive income, making them ideal for conservative investors or those approaching retirement. Bonds don't promise huge growth, but they offer something equally valuable: peace of mind. Gold is a timeless store of value. It doesn't rust, expire, or go bankrupt. It's been a trusted asset for over 5,000 years. Unlike stocks or bonds, gold doesn't produce income, but it shines during economic uncertainty. When inflation rises or currencies weaken, gold tends to strengthen. From 2000 to 2024, the price of gold rose from $270 an ounce to over $2,000, an increase of nearly 700%. Investors often allocate 5% to 10% of their portfolios to gold or other precious metals like silver and platinum. You can buy physical bullion, gold ETFs, or gold-backed digital assets. Gold acts like insurance, protecting wealth when markets wobble. It's not about growth, it's about preservation. When everything else crashes, gold often remains standing. Cryptocurrency is the newest and most volatile asset class, but also one of the most exciting. Bitcoin, the first and most well-known crypto, launched in 2009 and has delivered astronomical returns. From being worth less than $1, Bitcoin surged to over $65,000 by 2024. Ethereum, the second largest crypto, followed a similar trajectory. Crypto is built on decentralized blockchain technology, which eliminates the need for banks or intermediaries. It allows peer-to-peer, secure, and transparent transactions globally. But while the potential is huge, so is the risk. Cryptos can rise or fall 20% in a single day. That's why smart investors treat them like high-risk, high-reward assets, usually limiting exposure to 5% to 10% of a total portfolio. With the rise of Web3, DeFi, and NFTs, crypto continues to evolve. It's not just about currency anymore. It's about the future of ownership, digital identity, and finance. The best strategy here is to invest what you can afford to lose, focus on quality tokens, and stay informed. In today's digital economy, intellectual property is one of the most powerful and overlooked assets. It includes anything you create that can generate income without your constant involvement. Books, courses, software, videos, inventions, songs, even a viral meme. Unlike services where you trade time for money, intellectual property scales. You make it once and sell it over and over. A self-published author can earn royalties for life. A YouTuber earns ad revenue from videos made years ago. An app developer collects monthly subscriptions. These assets require creativity, time, and effort upfront. But once built, they work for you. What's beautiful is that IP can be created from your laptop. You don't need a factory or big budget. You need ideas, execution, and a platform. Digital real estate, as it's sometimes called, is the new frontier of passive income, and it's available to anyone with a voice, skill, or solution. Owning a business is the ultimate wealth accelerator. Whether it's a tech startup, a bakery, or a digital agency, businesses can generate far more income than traditional employment. More importantly, a successful business builds systems and teams that work even when you're not working. Nearly 70% of millionaires in the US are business owners. They started something, solved a problem, scaled it, and reaped the rewards. With today's tools, starting a business is easier than ever. You can create an online store with Shopify, offer services on Fiverr, or launch a coaching program from your phone. The entry barrier is low, but the upside is high. Businesses grow in value over time. You can sell them, franchise them, or pass them down. You earn profits, build equity, and sometimes attract investors or acquirers. It's not easy. It takes hustle, resilience, and failure. But if you're willing to learn and lead, business is the path to freedom. Real estate investment trusts, REITs, are a smart way to get into real estate without actually buying property. A REIT is a company that owns, operates, or finances income-producing real estate. like shopping malls, apartment complexes, warehouses, or hospitals. When you buy shares in a REIT, you're investing in a portfolio of properties. REITs pay dividends, often 6% to 10% annually, and they trade on stock exchanges like regular stocks. That means you get liquidity, easy to buy, sell, regular income, and real estate exposure, without worrying about tenants, repairs, or mortgages. They're especially useful for those who want passive income from property but don't want the management headache. And since they're legally required to distribute 90% of taxable income to shareholders, they're often a top pick for income-focused investors. Not all wealth is built in banks or boardrooms. Some is built in auction houses and collectors' rooms. Rare watches, fine art, vintage cars, sneakers, trading cards, luxury handbags. These are all alternative assets that have exploded in value. A Rolex Daytona bought for $12,000 in 2016 might fetch $35,000 today. A Michael Jordan rookie card sold for over $700,000. Fine wine, rare books, and digital art, like NFTs, are now considered serious investment categories. These assets often appreciate due to scarcity and demand, not because of income generation. The key to success in collectibles is expertise. You must know the market, the trends, and the risks. But if you have passion and patience, these unusual assets can be both fulfilling and financially rewarding. They're also non-correlated with stocks, making them great for diversification. Cash is often underrated, but it's incredibly powerful. It doesn't grow like stocks or pay rent like real estate, but it gives you flexibility, security, and power to act. In times of crisis, when markets crash or emergencies strike, cash is king. It lets you buy assets at discount prices, cover expenses without debt, and sleep peacefully. Warren Buffett is known to sit on billions in cash, waiting for the right opportunity. During the 2008 and 2020 crashes, investors with liquidity were able to buy great assets for pennies on the dollar and saw massive returns within years. Having 10% to 20% of your portfolio in cash or equivalents, like money market funds, isn't laziness. It's strategy. It gives you optionality, leverage, and peace of mind. And in investing, peace of mind is priceless. Becoming rich isn't about chasing money. It's about owning assets that multiply your time, energy, and capital. These 10 assets, stocks, real estate, bonds, gold, crypto, intellectual property, business ownership, REITs, collectibles, and cash, are your toolbox. You don't need all of them today, but over time, learn them, add them, let them work for you. You don't get paid for the hour. You get paid for the value you bring to the hour. The right assets increase your value, silently, steadily, relentlessly. So the next time you earn, ask not what you can spend it on. Ask what asset you can buy. Because wealth is not what you earn, it's what you own.